Today's episode of Market Talk is brought to you in part by Growmark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specializes in receiving continuous training for their specialists that keeps them current on the latest trends, practices, and technologies, so you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk here on this Friday, June 10th. Great to have you with us. Thanks for making us part of your day once again. I'm your host, Jesse Allen. Find us online, markettalkag.com. That is our home on the web. You can find our radio affiliates there, streaming sources, and much more. Well, we had a big Friday today with WASDE report out for the month of June. We got new inflation data in the markets and a lot to discuss. Let's not waste time. Joining us now, Bryan Doherty, Senior Market Advisor with Total Farm Marketing, is on with us. Bryan, great to have you on the show here on a Friday, sir. How are you?
Jesse, I'm great. Thank you. Yeah, my honor to be here. And yeah, a lot to talk about. Interesting, I'm going to say end to the week for both corn and soybeans. We can talk about that a little bit, but yeah, a lot of moving parts. In particular time of year, here we are, June 10th. Rubber's going to hit the road on the weather markets from this point forward.
Very, very true. Well, we'll talk weather market here in a little bit. I want to start with the WASDE report today. Fairly routine report is what is usually expected for June. That's basically what we saw. I know there was a few minor changes. Soybean ending stocks in the U.S. came in under expectations. Corn was a little above. There was some changes to Argentine production slightly. Ukraine corn was bumped up, but outside of those few things, I didn't see much that stood out to me. It seemed like everything really kind of came in as expected today, Bryan.
Yeah, exactly. And so one number I kind of like to summarize it all is the carryout, the ending stocks, because I try to draw this analogy. All of that data out there kind of goes into the top end of a funnel, and then it gets pushed out. So in the funnel are your production estimates, which is the crop itself, and within that comes yield and acres, and then there's all the usage components. So supply and demand, put it together. There's something left over at the end called carryout. So when you look at the carryout numbers in corn and soybeans and then the world numbers as a whole, um, I would make the argument one way to look at it is say, hey, the USDA sort of punted. They made some adjustments that were probably necessary, but to maybe the USDA's credit, there just isn't a lot of new data that we had between mid-May or let's say the 1st of May, the 1st of June. So you usually don't see big changes unless there's some real dramatic situations. And May started out pretty dramatic. The USDA did lower the yield on the May report. But May ended up on a pretty strong note for planting progress, and then um, early June here. So to not ramble on, but in soybeans, a little friendly, 205 million bushels carry out. Um, that's what's going to be left over at the end of this summer. So what that tells us at 205 million, it tells us it was more than last month's 235 million and below the pre-report estimate of 217 million. But I'm kind of a simpleton in this regard. I look at 205 million and go, okay, that's not a lot of soybeans. What if we drop 1 bushel an acre in production just because of weather? Roughly 80, 90 million acres less or bushels less there. If we drop a couple bushels, you can see where it's really tight, is my point. So confirmed tight in soybeans. Next year, beans, a little bit of a rebound there, 280 million, still not very much. So the next 2 years on the table for beans looks tight. And then over in the corn market, carryout rose a little bit today, 1.485. Years ago, that was a very comfortable number. Right now, it's kind of a sticky number. It can become very uncomfortable quickly. There again, you drop yield 2, 3, 4 bushels an acre. Now you're near a billion, and it gets really, really tight. Next year, even less, 1.4 billion. So with that, and even next year, that's also factoring in a bump back up in expected production out of the southern hemisphere for soybeans because of the drought in 2021-22 season. It lowered Brazil's production. Every expectation is they'll be back to normal. So very wordy, but a lot of numbers didn't really mean a lot at the end of the day. Corn finished steady to three higher, and soybeans, I think it was probably some profit taking, as they call it, Friday. Good up week, some money coming out of the market, maybe repositioning on some of the equities that were down again sharply today, and maybe the fund money says we're a little bit too overbalanced on long beans.
Well, you mentioned this at the top. You felt like it was kind of an interesting close to the week here for corn and soybeans. So maybe expand upon that a little more, because I know as well. We'll talk inflation data in a minute, but this has really started to kind of become a weather market as well. You alluded to that earlier on when we
Yeah.
got going, and it's really starting to be a focus right now, Brian.
So this is to me always kind of a balancing act here in June. Is you've got a 6 to 10 day forecast that reads above normal in temperature, below normal in precipitation, so a little bit warm and dry. So part of me looks at that and goes, well, you know what? That's called summer. Okay, you have warm and dries, and you. The other part of me says, ooh, not a lot of room to err. It's been kind of a wet spring for many. Now all of a sudden the spigot turns off. Is this the beginning of a prolonged warm and dry? And if so, how do different soils and plants handle this? So long term warmer, drier conditions have to start somewhere. So that's the other end of the spectrum. Are we entering now a phase of what some people have been talking about as a ridge of pressure that kind of gets pushed into the western Midwest and kind of gets parked? And then all of a sudden we run into some of the scenarios we've seen in the last several years where you just can't buy a rain shower. And thank goodness for timely rains last year, because that is exactly what happened last year. And timely rains saved the crop.
Very, very true. And you mentioned this too, a little bit of profit taking there in the bean market today. Beans really have had a fairly decent week overall. And I look at just where everything, not just beans, but corn, beans. I mean, we've been testing up some of those levels, beans nearing highs, corn, old crop contracts pushing near $8. It seems like it's been a decent indicator of some commercial demand here this week, Brian.
We've got commercial demand and some of the basis levels that have really popped. Again, indicative of tight inventory within the country in certain pockets and maybe the entire country. So you had this pretty hard setback. Even new crop corn, we closed today at 720 and a half. I see interesting. Our low last week was 682. So 20 and 18 were 38 cents off the low. Pretty good bounce back. Now we're not quite to where, I'd feel comfortable saying we're in the middle of our range, but we really are about in the middle of our range for the last couple of months. And that's really what the market is. What I think the market is doing is just kind of marking time right now. The bears can't get too bearish. The bulls can't get too bullish. They need to get something that affects the size of the crop. But an interesting close that the market did take the buy side on corn that had been two-sided trade all day and mostly negative kind of into the late noon hour. Then it perked up into the close. I always think that's a good sign on a Friday. At least it tells me that's where sort of people are willing to put their bet. The traders are saying, "Hey, we want to own corn into the weekend." They're willing to hold it into a. Now you've got a 48-hour window where there's no trade, or more than 48-hour window. So they can't really change their mind in the next 48 hours. So beans, though, that trend looks up. Boy, it goes back to, I think, just that tight carryout number, 205 million. Yay. You know, start dividing that by all of the Midwestern states, and then start dividing that by the number of counties in each state, and then the number of farmers in that county. There's not a lot of beans sitting in storage bins anywhere.
Brian, I want to touch on the wheat market here as well before we continue our discussion and look at maybe some of those inflation numbers. Yeah, wheat today, I know on the WASDE report, USDA bumped up winter wheat production here as well. I believe it's about 8 million bushels. Looking at the wheat markets today, Chicago fairly firm. Kansas City wheat had some good buying today, and as wheat was fairly firm. And any thoughts with the wheat markets here as we wrap up the week and got those June WASDE numbers?
Yeah, on the wheat, production sort of increased a little bit. Maybe it surprised some, but the market didn't really run with it or is negative or anything like that. I think the hard red winter probably told the story by the close. Firmer. You've got poor conditions in the Southwest, down in Texas, up into Panhandle and elsewhere, where it just been battling dry weather all year. Um, the tricky thing with wheat is trying to understand or trying to get your hands around what should be a fair price or equilibrium price for wheat. And the problem with that is that analysis is from my perspective, Jesse, is that wheat's produced in every major country of the world and produced really 12 months out of the year. And so you have all this ebb and flow of that information. And this year, throw Ukraine in the mix and Russia in the mix, and how much is on hand or not on hand or going to move or not going to move. Very precarious. So a lot of volatility. The wheat market has disappointed many because it's trading significantly high, low off its recent highs. But that high was predicated on the idea that no wheat would be shipped out of Ukraine. There seems to be a lot of behind the scenes work by a lot of different people trying to figure out somehow to get this grain to the world. And so far, it's not been too successful. But if it does happen, that helps to alleviate kind of the perception, at least, that the world's going to, quote, run out of wheat and kind of starve. Um, that being said, we're closing in on harvest every day, too. It started down south. Um, Soft red winter wheat got good moisture, I think, to help push it along and fill heads. And the farmers that we're talking to are, in general, you can tell when you kind of ask the question, how does your wheat look? Give me your just your knee jerk. You kind of hear pretty good. When you hear pretty good, it's pretty good. Farmers don't usually like to brag about how good things are, but so when you hear pretty good, that means they're pretty good. Uh, so that's why I think soft red may have had some difficulty there, but kind of strap on your seatbelt. Expect high volatility in the wheat environment. It's just such a dynamic world right now.
Brian, we should discuss the inflation numbers a little bit as well. The headline CPI number this morning, 8.6%, up from 8.3% the previous month, at a 40-year high for year-on-year increases in prices paid by consumers. I know it was a bit of a surprise to the trade, and it really felt like it put a cap on the broader commodity sector today. We had some of that risk-off feeling in the trade early. Then we got the WASDE numbers out that helped out some of the grains a little bit. But overall, it felt like that inflation data was kind of a lid on everything today.
It did. The stock market was pounded early on, down 6, 7, 800 points. It's kind of been trading there all day. That's after a down day yesterday and some of these expectations. And I think what the report does today, there was some optimism actually that, hey, maybe the Fed won't raise what rates quite or need to raise them quite. This is another confirmation the Fed needs to take more action. This inflation thing is really starting to become old. In particular, a lack of confidence in maybe the Federal Reserve and maybe the administration when we were told, look, this is just a supply chain issue. It's transitory. Let's not get over our skis and worry about those type of things. It'll take care of. Now we're hearing kind of, well, maybe so it's a confidence issue. How much confidence? So the Federal Reserve is probably going to have to make another couple of upticks, a couple of changes, and they're trying to worry about this balancing act about raising interest rates too fast and sending the economy into a recession versus slowing the economy yet keeping it strong. You're starting to see some other service sectors starting to actually look at layoffs, things like that. The consumer just, even the travel industry I was reading this week is, everybody's gangbusters to go somewhere, and all of a sudden that's starting to cool quickly. It's like, wow, it's going to cost us twice as much to drive somewhere, twice as much to fly somewhere. And what we're hearing is everybody's trying to get somewhere, and the service is terrible. I think people are going to kind of start watching their dollars closely. They've been watching it closely in the grocery store, and now in the gas pump, it's killing them. I think there's just a natural caution coming over the whole nation at one time, whether it's food, fuel, whatever it is. It's more concerning, and I think you'll probably see more abrupt action.
A lot of things to consider there. Brian, let's talk livestock today. Hog market was good. A lot of green on the screen there. Cattle under a little bit of pressure here to wrap up the week. We saw some pretty good cattle trade in feedlot country here this week as well. Any thoughts in this livestock market overall?
We did. Well, I think this. I think May was such a crappy month for the grilling season in the nation that the grillers came out late May and June, and the retailers, and I think the futures market reflected that. I'm going to throw it there. Choice cuts, big move against selects, kind of telling us that feedlots are probably a little more current, or they're not adding $8 corn to cattle. So I think all of those things are providing underlying support. A little disappointed with today's trade. I was hoping we'd really punch the week out on a good note, but it didn't happen. But we're back to where we were. The big picture, long-term good news is that exports still remain strong on year to year, and China coming out of lockdown, we think that that's a good export market. So we're going to stay with our optimistic view, but cautiously slow. Those previous cattle and feed reports found inventory. I'm going to say found inventory. I think what happened is they gained inventory beyond poor pasture conditions, but um, uh, so we'll stay cautiously optimistic. If you're if someone who's got cattle in a lot that need to go this summer, I got to highly push the idea of or suggest you look into the put option strategies, get a floor in this market. Cautiously optimistic, but not necessarily trusting of commodities as a whole. The markets, there's just too many spinning wheels, and today's inflationary numbers are concerning to us from that perspective.
Brian, real quick, any thoughts in the dairy market trade here as we wrap up this week of June?
Dairy prices have, across the board, great demand. Butter prices hit new highs this week. As we look to the deferred months, you're looking at $24 milk all the way out to November, December, or in that range. December's a little bit under 24. Inputs certainly have come up, but that's still a whale of a price. And defensive posturing or starting forward selling again on the second end of second quarter here, but mostly the third quarter, fourth quarter, really give some thought to, if you're a dairy producer, to not letting this kind of slip out of your hands. Um, but it's a two-prong approach. You've got supply-driven markets. We've talked about this forever. The labor is still an issue for dairies. I don't think there's any real expansions underway. High prices of grain, I think, will keep cows pretty close to the knife. Even though they're getting paid well, you still got to think about the input side. So it does, when you talk to a dairy producer, if you're not careful in your wording, you'll say, "Hey, milk's 24.25," and they'll come right back and say, "But these inputs are killing us, and we're not making much at this." So that's all true. Um, that's why it's really important to be a sort of a really strategic defensive marketer, because you don't want inputs coming up and then milk tipping over if the consumer starts to back away from some of the product.
Well, Brian, appreciate the time as always on a Friday. Any final thoughts you have for us today?
Well, as I started this conversation, I'm going to use that term again. This is where the rubber hits the road. I mean, this is it. We're into the throes of our weather markets. I generally say December 15th for South America, June 15th for the U.S. There's a lot of fireworks in spring, but in the end, it seems like we kind of migrate toward getting most, if not all, the crop in, and then it's really the summer weather that matters. And in particular, this year, the thing to watch for are these forecasts into July, because you've got a significantly late crop in the south that was basically planted at the same time that everyone else was planted. They didn't have that advantage. So we think that's supportive for maybe the September contract. But you've got a lot of sort of your eggs in one basket mentality, I think, on corn, maybe more so than beans. Talked to a lot of farmers today that were really happy with the progress they made in planting beans this week. So feeling pretty good about that. But corn, that's the fickle one. Um, I wouldn't be shocked, Jesse, if at the end of the month we find out farmers did plant more corn acres. Um, it just
Yeah,
that's the way the numbers kind of panned out, the ratios.
very true. Well, it's something we'll be keeping our eye on. I know we're going to turn our focus to that June 30th stocks and acreage report coming up. Brian, if producers need a little advice for their marketing, I know they can reach out to you and the team there at Total Farm Marketing very easily, can't they?
They can catch us at 800-334-9779 and give us a phone call. We got a website, got email. If you want to email me, Brian at totalfarmmarketing.com, with a Brian with a Y. Otherwise, you know, love to have the conversations.
Definitely. With that, Brian Doherty, Senior Market Advisor at Total Farm Marketing. I appreciate the time, sir. Have a great weekend.
Yes, sir. Thank you, Jesse.
And that is going to do it for Market Talk here on this Friday, June 10th. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.